Hey guys, welcome back to the NZDayTrading101 channel, a place where you can learn how to day trade stocks. And so today I'm just going to talk to you a little bit about the charts I use to find a trade. So in order to day trade stocks, you need to really try a trade in the direction of a trend. So if you have a long-term trend that's going upwards, you have pullbacks along the way. So every time a stock pulls back or breaks out, you want to be in those trades so you can trade it on the way higher. So today I'm just going to talk to you a little about and just show you a trade that I did. I think it was in about January. So stock ticker was PLX, and that's a really good example of how you can use the chart to trade and know when there is a trade. Yeah. Okay. So the charting software that I use is TradingView. So TradingView is one of my go-tos. So basically, it's probably one of the best New Zealand trading charts you can get out there. You can also use Google. You can also type the stock ticker into Google as well. Just look at a basic chart there. You can also use the little charts they have on your broking sites as well. But today I'm just going to talk to you a little about TradingView, the one I use. All right. So this is a home page for TradingView. As you can see, it just comes up with a bunch of tickers up the top, but that doesn't apply to us. So what we want to look for is, so for example, PLX. So Plecture is a company in New Zealand. It's a New Zealand traded stock. It's a very nice stock as well. I like to trade it because it's quite cheap, and also it doesn't have as many shares outstanding as compared to like something like Auckland Airport or Mainfreight, meaning that when people get into the stock can push higher. So here we go. So just going to click on PLX here, and this is sort of the chart at the moment, and we're just going to go to full featured chart. Here we go. So ignore what's happening in the current market now, and we'll talk about a trade that I did and how I profited. If you guys want to see some of the profits I've made, just go to my Instagram page. So Solo Day Trader. If you type into Instagram, you should see like a pictures of some computers, and just click on there and just go to highlights, and you'll see some of the profits that I've made along the way. So let's get started. So here we go. So PLX was a trade that I made a few months ago. I made about $500 on it. It was a nice trade. For me, it was quite simple. The setup was there. Everything was in my favor. So let's go over it. Alrighty. So as you can see here, this is the chart for PLX. So these are candlesticks, guys. So I've put my own settings on this chart. I have what we call the Bollinger Band. So the Bollinger Band is these skinny bands just over here, and that lets me see if a price has it overbought or has it oversold. So as you can see here, this one, the price is going sharply in one direction outside the Bollinger Band, and I know just by looking at that it's due for a pullback. So if I see the stock price is outside this Bollinger Band, then I've got to be careful because I know it's looking to pull back at some stage, and I shouldn't be getting in when it's outside the Bollinger Band. You can still get in, but you just got to be a bit more careful about it. Same thing over here. If we look up here, so the price is way outside the Bollinger Band. So especially when the whole candlestick is outside the Bollinger Band here, you can see here, you can see it up here. It's like 80% chance it's going to pull back because the price is just too overextended. So one of the trades I entered was this one here. So as you can see, we look at the trend here. The trend is long-term upwards trend, and I've obviously identified that. I've seen that the earnings have come out recently. So this E here means that they've had their earnings. So what I did here was I knew that a range was forming here. So there we go. So I'm just going to put a couple of lines here, just to show you the trade that I made and how I made it. So here we go. So this is what you call basically a flat top breakout. So what's happened is the price has broken out of a previous range as well. So this was a range here. So here we go. There's a bit of range. Then the range shortened over here. So this is all technical analysis. So here we go. So first it broke out of this range here. So it was trading between 56 cents and about 44 cents. After that, it went up and it went up. And here we go, and it started trading up here at 87 cents when it was outside the Bollinger Band. It had time to consolidate. I formed a small range here, and this is where I was like, all right, I'm going to get in. So the reasons why I got into this trade was obviously the earnings came out, so it was a catalyst for the stock to go up. And as it went up, it consolidated. It's consolidating between two ranges, and also the 9 EMA. So the 9 EMA is this light blue sort of indicator here, and that's just a short-term indicator to let me know which way the price is heading in the short term. Again, you have this the 200 moving average down here. So this moving average white one just allows us to see the long-term direction of the stock. And then you have like 50-day moving average here. So I don't really use those. The main ones I use is the 9 EMA, which is the light blue one, and the Bollinger Bands. And apart from that, this is all price action, guys. So basically, we're just putting everything in our favor to see which way is the price going. And obviously, because we're in New Zealand, we can't really short stocks. We always want the price to go up. So we want to be trading companies that have a long-term upward trend. Those are going to have your A+ setup. So this one here is an A+ setup. So again, let's go back to it. So as we saw here, we're like, all right, it's consolidated for a while. It looks like it's still continuing its upwards trend. We're going to put our trade into here, and if it goes down, so with me, I entered the trade at about 85 as it was breaking out. So you can enter it in you can enter your trade anywhere here. You can enter at 80 cents, you can enter at 83 cents, 84 cents, something like that. And then what you want to do is just want to wait for it to break out. But if it doesn't break out and it starts to go lower than your stop loss, so basically, another thing, guys, is you don't want to have a physical stop loss in place. You want to have a mental stop loss. You want to know, all right, has the price gone down to here, 77 cents? You have to get out because that's part of your rules. So in order to day trade, you need to have a set of rules that you need to follow and not break unless it's extreme circumstances, then, or you need to take the opportunity. But as a beginner, you shouldn't break it at all. All right, so as we saw here, so I entered in here. I saw that support was holding at 80 cents. I also looked at my market depth, something I've talked about in my previous videos. So market depth allows us to see where support is and resistances. So basically, are the buyers all bunched up? So here, there were a lot of buyers at 80 cents. So I knew that if the price did drop to 80 cents, I can get out. And I entered my trade in at about 84 cents. So here we have a 4 cents between my stop loss. So because I'm risking 4 cents, I want to make at least 2 to 1. So I want to make at least 8 cents. So if I'm at 84, I want it to go to 92 cents. Here we go. So we want it to go. So my target is 92 cents right there. So I would have entered in there. My stop loss is here. So here you go, guys. As you can see, so whoops. So I would have entered in at 84 cents, and as it, whoops, I'll just get my tool out here. So this allows me to see how much percentage I would make. Here we go. So we got there. So I would have made about 10% that day. So roughly 10%. Cool. And if it does go the other way, so I'm risking. So this is just indication, guys. It's not proper. It's just like a rough example. So I'm risking about 4% to make 10%. So I'm making essentially about 2 to 1. So, which is a good trade, and everything's in our favor because the long-term trend is going up. The 9 EMA is curling. So another thing is this 9 EMA curl. That is key. 9 EMA curling like that, you want that to curl because if it's curling, the price is moving up in the direction we want. So what's happening, guys, is the price is squeezed. So the price is squeezing in one direction. It's kind of like, let's give an example. It's kind of like, all right, you're trying to smash through this roof, smash through this roof, smash through this roof, and obviously the price is not going. At the end of the day, if you keep smashing through the roof, keep smashing through the roof, it's going to smash through and you're going to be going upwards. And exactly what's happened here. So the price is squeezed higher. So it's probably gone into a little bit of a range. It's squeezing, 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 squeezing. I enter my trade here, and then here we go, and then here we go. So now that resistance is broken. So resistance is broken here. So If we're entering at 83.84 and it's had 1, 2, about 3 taps, and after it's had 3 taps, I mean that it's just soaking up that resistance. It's just like breaking through. So if you keep refreshing your market depth, and you'll see that, okay, resistance is breaking, all the sellers at 84 are drying up, and there's literally no way for the price to go except upwards. And here we know this is a good trade. You would enter and you'll just follow it higher, follow it higher, follow it higher. So this one exploded higher, really nice. So I took my profits at about, I can't remember, around about the 90 cents, and I went up all the way to $1.20. Another thing, guys, is you don't need to catch all the profits. You don't need to catch the whole trade from here to all the way up here. If you do, then great. But to be a successful trader in the long term, we just want to make little profits. Well, not little profits, at least catch like a good chunk of it. So we want to catch about that much. That's a good amount. You don't need to catch up the top, because what happens is, if you're waiting for it, as soon as it dips, which is, you can sell if it starts dipping, if that's your trading strategy, people don't tend to get out because they'll think, okay, it's going more higher, it's going more higher, it's going more higher. All of a sudden it drops back down to where you wanted it to be, and you could have sold it here $1.20, but you had to sell it at 96 cents or something. Or sometimes actually the price comes back down to exactly where you entered it. Yeah. So another thing is, if you guys enter a trade, make sure you get out, because obviously this is not a foolproof strategy, but it can work about 90% of the time. And day trading, at the end of the day, guys, is just managing your risk. Just manage your risk. Have small losses, big wins. Small losses, big wins, and just keep growing that account higher. Keep growing that account higher. You will occasionally take a hit. You'll take like you might take a loss here and there that's bigger than usual, but just make sure that your losses don't go out of control. And like I said, the most important rule in day trading, like the last video, is cut your losses quick. That's it. Another trade I want to talk to you about is something that was probably the best trade of last year, was CBD. So you can see that this CBD has beautiful price action here. You can see the volume coming in. So obviously this was trading in the range a long time. So I'll just draw out that range for you guys. So here we go. So this was trading in a range from here to here. All of a sudden we start to see some volume coming in, and the volume is starting to come in and it's broke that resistance of 40 cents. So because it's traded in the range, what normally happens is there'll be lots of resistance at 40 cents and lots of support at 35 cents. So when the sellers dried up at 40 cents and there's no more sellers, and the sellers selling was very minimal, the price started to go higher in the direction we wanted. So price action started to move up, the volume was there to confirm it, and we just moved up and up and up and up and up, and the IPO price was 50 cents, but it moved way above that. So it had a huge spike, and this was simply due to news. Everyone was trying to get in on the marijuana stocks, and that's what caused the price to really just bust up in the direction we wanted. So if we saw more moves like this in the NZ market, there'll be lots of trading opportunities. But trading opportunities don't come all the time. But when they do come, we should be ready. We should be like, all right, this is a trade I want to go into. You don't need to trade every day. You don't need to trade. If there's no trades available, don't force yourself into a trade. You will see it. This is something that anyone could have seen if they were a trader, because they'll be like, all right, there's lots of news out. The price is going in one direction. There's lots of volume over here to confirm that the buying is real, and it's just going up and up and up. So obviously you don't have to catch it all the way up the top. You can even enter in halfway here. So if you want to like use a candlestick or you want to really use your market depth as well. So you've got to use all these tools in conjunction with each other to form a trade. Cool. Another thing I want to talk about is the stochastics as well. So going back to PLX. Here we go. So something with the stochastics is, these are what you call the stochastics down here, and there's two lines. So this basically helps me, again, it's just an indicator. So these are just indicators. They're not something that's foolproof. It's just about, what you need to do is create a case. You need to be like, all right, how many stuff is in my favor? All right, the long-term trend is up. There's lots of buying volume, green volume bars here. The price is stuck in a range. It looks like it's about to break out. The EMA is killing underneath. The stochastics is looking a little bit oversold here, and there's obviously just had an earnings announcement out. So that gives me enough good reasons to be like, all right, I'm going to enter this trade. Now, since this trade is not 100% foolproof, I want to make sure, okay, I'm going to risk about, what, like 5-10 cents and be like, all right, I'm going to get out here if it moves to 80 cents and stick to those rules. If it goes up, the thing is you have to control your emotions. You do not fall into FOMO, which is fear of missing out. If a trade is slipped from you, do not enter it at the top here thinking, all right, I'm going to catch some of this, I'm going to catch some of this. If you're looking to enter in after a trade, just go back to your steps and create that case again. Is it going higher? Has it got that support and market depth? And just put all these things in your favor. So yeah, so that's it today for charting. 15 minutes, probably a long video. No one wants to watch probably that long, but we've got so much to explain in these videos, but I'm trying to get everything just sort of crammed into one video. So, but I hope this helps, guys. And if you have any questions or comments, just put it below. Please like and subscribe to this channel. I really appreciate it. It really helps to keep this channel going. I want to provide really good content for you guys and make sure that I make it easier for you guys to make a side income or an additional source of income from trading stocks short term. So thanks for watching, and I'll see you for the next video.